Good morning all, hope you're doing okay. Risk sentiment overview for 14th of the 6th 2022 for the Quasidb customers. We flipped to risk off at the big picture. However, the big caveat today and probably for the rest of the week is that we've actually officially entered a bear market territory on the S&P, meaning that we're 20% off the highs. Now the thing is that I'm wary about, because we're contrarians and we do the opposite of the herd, is that once this news sinks into the hive mind, that's going to cause them to panic and they'll sell. If they do that, then risk will rally, because the big fish really don't want the small fish to be buying when we're in a bear market, because there has to be someone to take that trade. So that the broker has to fulfill that order. So if they're bullish, the broker has to sell, and that's not good. That's like a bearish scenario. Okay, so overnight, Robinhood customers and plus 500 clients, they were being told about the bear market, and so when they wake up today, it's still quite early. They'll probably get that email. And they'll probably still in their sort of a sleepy mind. They'll think, right, okay, well, okay, so that's official. We will sell, and if they do it en masse enough, then then we can potentially rally. Now the issue is that caused me to worry is this: on the S&P, we're going to get a buy signal on the setup that we use, and likewise on gold as well. We're going to get a buy here. But yeah, it's possible we're going to not be in bear market territory, and this is going to be one massive horrible trap. So that's caused me to worry quite a bit. And even though the US yields have inverted, it might just be a sentimental play, and this could be a trap. So we have to be really careful. And the thing is, the bubbles are supporting a risk off. The sentiment is supporting a risk off. The US yields are supporting a risk off. Technically, risk off. However, that could be a trap, and we might go risk on. And don't forget, we've got FOMC on Wednesday, where we're going to potentially be hugely risk off. So we might be seeing a positioning ahead of FOMC, where we'll come up in order to sell. So potentially we can rally, and then we'll sell at the FOMC. So we have to think forward. We have to position ourselves using forward guidance, looking at risk events for the week ahead. We've got FOMC on Wednesday. Wouldn't it be likely that we sell at the FOMC risk event, and then therefore we can maybe rally today in order to sell on Wednesday, and especially if we get a buy here? So you've got to be careful. We have to think not just necessarily now, but what's going to happen in the future. And it looks like they're going to short against this 21 moving average. Okay, so maximum care and caution. So it could be a big trap. I'm apprehensive today because of that. Okay, so we've got some red cells on the indices, which we can see, and green cells for dollar CAD and euro pound, which is quite interesting. UK 100 was the biggest mover. Yen is strengthened, so that adds to the risk off theme, and the dollar strengthened as well. When they strengthen together is a risk off sign. So things are pointing towards risk off, and there's the red for the indices, and there's the green. Euro yen's a buy, so that's interesting. Oil's a buy, dollar yen is a buy. Gold's a sell. You can see red and greens, and what you want to do is watch these numbers increase or decrease. If it increases or decreases, it just confirms the bias. So it's really good getting the FXCM trading station. It's really amazing. This is the buy setup. Potential. Be very careful. Likewise of gold. And that's what I was just saying at the beginning of the video, is that we are officially entered a bear market. And so when they're woken up, and they haven't really woken up properly, and they're probably having their morning coffee, and they get their email, and then they'll panic, and then they'll sell. But if they do it collectively all at once on the same time, then it's going to send prices higher because they'll sell. Okay. And yeah, so the big fish, they want them to be in fear, and there wasn't enough fear before, and the small fry were buying, and we didn't really want that at all. We want them to get shaken out. Big risk off indication, so this has caused me to worry a bit. So if they come down, possibly it might be a risk on sign, but they're pumping. This is pumping crazy amounts as well. They shouldn't be. The reason to be wary about this is that this is a flight to safety, and if these are pumping, then it's saying get out of the stock market, invest in bonds, because you've got a 3.5% interest rate return, or on the 5 year. So put your money in the 5 year and you get a 3.5% return. If you put your money in the stock market, you might not get any return. However, this is still inflation is still ruining this, even if because the inflation is so high. So we are in a stagflation environment where you'll probably lose money on your stock market, and the bonds aren't really. They're giving you some interest rate, but it's not inflation beating. So it's quite problematic currently. So we'll have to wait and see what happens tomorrow. We might invert more tomorrow, so we'll have to wait and see. Supports a stronger dollar. Yeah, so the 10-year tracks dollar yen very well. So if that spikes, the dollar yen comes up. So keep an eye on the 10-year. Largest mover was gold, huge mover, and the largest stop loss cluster is pound yen. So my second video is going to be about the stop loss clusters, and it'll be a short one, and we'll just look at some yen crosses. And location is there at 164.48, and the size is huge at 6.5 in size. Swiss is strongest and gold is weakest, so you pitch strong versus weak. Dollar is in the strong buy section with CAD, and it joins Swiss. Note where the yen is as well. The yen comes down, that's going to be quite risk off. Signals were amazing. We got 228 pips. We had a nearly 100% hit rate. Only Kiwi USD had a loss of 3 pips, which is really, really good. And this makes me wary about today, because they got punished so hard yesterday. They might get paid today, and we might want to entertain the idea that they might get paid because they got so punished yesterday. If they get punished 2 days in a row, they might leave the casino, and the big fish don't want that to happen. And the current myfxbook failure rate is 24%, so it's very low, and it tells us that they are getting paid, and so this supports this theory. So perhaps it's going to be a low percentage for the remaining of the day. If so, if we get a signal, do bear that in mind. You may want to check the channel, the myfxbook channel. If it's below 50%, just stay away. If it's 60 or 70%, that gives you a 60 or 70% confidence factor. If it's above 80%, then yeah, sure, take the signal. But if it's that low, completely avoid it, because I think they're going to get paid today. I'll be back later. Just let me know if you need any help. I'll probably work on the FAQ document, add some questions that I've got over the years, and I'll add them onto there. And I'm going to do an SLC video now, so we can look at that pound yen, because something that's very naughty is happening, and they did the same with the euro yen, and they're doing the same for the pound yen. So watch that video, and I'll speak to you guys soon.